Hi friends, how are you? By blessings of the God, you are doing well. Once again, I am welcoming to all of you to Dr. A B JENA classes. So, this is Dr. Jena, Senior Assistant Professor, PG Department of Business Management, Fakirmon University, Basor, Bihar, Balasore, Odisha. So, this discussion is related to the working capital management as well as the financial management. And in previous video, we have already discussed what is the meaning of working capital, what is the meaning of capital, what is the meaning of fixed capital, as well as concept of working capital, and the necessity or significance or the need of the working capital. So today we are going to discuss what are the important factors, the determinants. So they usually normally influence the working capital. So what would be the working capital? So according to these factors, so the business organization will determine or will fix the investment of working capital into current assets. Okay, in previous examples which we have already discussed, by citing the suitable example, what is the meaning of working capital? So working capital is very vital to the business organization. So the business organization should maintain, the business organization must maintain the right amount of the adequate working capital in order to meet the day-to-day expenses of the business organization, as well as will purchase the raw material towards the production process. Okay, so dear friends, without delay, we will start our academic journey, and this discussion will be not only be helpful to the 12th standard but also the UG, the PG, so far as the commerce management, BB, PMR also subjects are concerned. Okay, dear friends, so before discussion, you take the screenshot of today's discussion. So far as today's discussion, so I have or we will discuss the 18 important factors normally. So they are influencing or they will influence the working capital. Okay, dear friends, okay, take the screenshot. Yes, no doubt we have already discussed the meaning of the working capital. Again, we will discuss what is the meaning of working capital. So working capital, it refers to the gross working capital. WC means working capital, which represents the amount of funds invested into current assets. CA stands for current assets. Yes. So what are the important factors normally? So they influence the working capital. WC means working capital. So first one is that is the nature of the business. So far as there are the three kinds of business: agriculture sector, service sector, manufacturing sectors, as well as the tertiary sectors. Yes. So nature of the business will influence the working capital. So far as that is the trading and financing firm as well as the banks, so they will need more working capital as compared to the public utility and the manufacturing organization. Public utility and the manufacturing organization, so they will need more the fund or more fixed assets. So in this situation, public utility and the manufacturing organization, so they will require the less working capital. Okay, come to the second one, it is the size of the business. Size of the business. So so far as the size of the business, so business is normally divided in three parts. Let's see, that is the small scale business organization, medium scale business organization, and the large scale business organization. So far as the size of the business, small scale business organization will need or will maintain the low amount of working capital, whereas the large scale business organization will maintain the more working capital. From the third one is that is the production policy. So production policy, whether the production policy is continuous or whether it's a seasonal. If a business organization is having with the continuous production, then particular organization will need more working capital. And so far as the seasonal production policy, of the business organization, so they will require what? The less amount of working capital. Come to the fourth one, that is the manufacturing process or the length of the production cycle. So manufacturing process or the length of the production cycle, I mean the raw material will be converted into work in progress, and the work in progress will be converted into finished goods. If the production manufacturing process or the production cycle is happening with the longer period, so in this situation, so there will be the requirement of working capital than that of the shorter production cycle. If it's a shorter production cycle, so in this situation the low amount of working capital is required. Then the seasonal variation. Okay, for the peak period of the business, let's take an example, that is the woolen manufacturing company. So normally, so it's a, that is the winter vacation, it's the peak period. So in this situation, so they will need what is this, the more working capital. So similarly in ice cream company, so in the summer, I mean the hot season, so they will require, so because the hot season, it's the peak period for the ice cream companies, so they will need the more capital. And in other time or otherwise, so they will maintain the vice versa, means a low amount of working capital. Then the working capital cycle, in previous video which we have already discussed, again we will discuss what is the meaning of working capital. Yes, working capital cycle, it starts, working capital cycle starts with the purchase of raw material and ends with the realization of cash from the sale of finished goods. If the working capital cycle is longer, then so there will be the requirement of working capital will be more. If it is the shorter, I mean the shorter or the short working capital cycle, so in this situation there will be the less amount of working capital. Yes, so working capital cycle which we have already discussed. So cash, again after cash you will purchase what is the raw material, then the raw material will be converted into work in progress, then the work in progress will be converted into finished goods, then the finished goods are ready for the sales, then the sales will be made, the sales may be on credit or cash. So it's that is the sundry debtors, or it's that is the accounts receivable or the bills receivable. So if it is the longer period, then there will be the more requirement of working capital. If it's the shorter period of cycle, then in this situation, so there will be the low amount of working capital. So next one is that is the credit policy. So credit policy means the business will sell the finished goods to the customer either in cash or the credit. If a business organization sells the finished goods or the final goods to the customer on more on credit, then in this situation, if it is more credit policy, then the more working, there will be the more working capital, and otherwise it's the vice versa. Okay, so just I am giving the example. Suppose one company that is the selling, that is the credit policy. What is this? The 50-50. I mean, what is this? 50% finished goods will be sold in cash basis, and the remaining 50% finished goods will be sold in credit basis. If another company, let's take an example, that is the 70 and 30, or let's take an example 30 and the 70, and 30 is that is the cash basis, and the 70% will be what? The credit basis. So in this situation, if a business organization or if a firm sells its final goods to the customer more on credit basis, so in this situation, that firm or business organization will need what is this? The more working capital, and otherwise it is vice versa. If there will be the low credit policy or the less credit policy. In this situation, the particular firm or business organization will require the low amount of working capital. That is the business cycle. It's very important for the examination. Not only the examination purposes of also in UGC as well as lectureship and other related examination. So you will get the question, what is the meaning of a business cycle? So business cycle refers to alternate expansion, I mean the growth, or the contraction, I mean the decline in the general business activities, BUS, that is the business activities. Okay, second one, it's the another meaning of business cycle. It is a cycle of economic activities. So business cycle, it is a economic activities. Okay, usually consists of what the stages, that is the recession, recovery, growth and the decline. So these are the stages of a business cycle. So business cycle is very important. Once again I am repeating, it is a cycle of economic activity usually consisting of a recession, recovery, growth and decline. In the case of suppose the business is having or the firm is having with the expansion or the prospering stage. So in this situation, particular firm will require more working capital. If the particular firm is having with this stage, I mean the contraction or the decline stage. So in this situation, that particular firm will maintain the low amount of or the less working capital. Okay, now we will go ahead to discuss the other factors. Now we will discuss the other the important factors. So they usually influence the amount of working capital. So before discussion, dear friends, you take the screenshot. So these are the growth rate of the business, earning capacity, and other factors. Okay, so we will discuss one by one. So first one, it's ninth one factor is that is the growth rate of the business, BUS, that is the business. If the business is growing, so in this is a growing business will require or will need the more amount of working capital. Suppose company A and the company B, or business A or business B. If a business A is growing, then A business or the firm will need more amount of working capital as compared to the B firm. Yes. Then the earning capacity. The earning capacity, if the earning capacity of a firm is found high, then in this situation the earning capacity will contribute the more amount of working capital. So it's that is the favorable and the positive and the good for the business organization or the firm. Yes, next one is that is the dividend policy. If the payment of a dividend is more or the declaration of dividend is more, then the such firms or the company will require more working capital, and otherwise it's the vice versa. Okay, so A is a company, B is a company. Suppose A will declare more dividend, then A company will require or will need more amount of working capital as compared to the B company. And the B company, if the B company will declare the less dividend, then the B company will maintain or will require the low amount of working capital. So dear friends, now you are clear. Then next one factor is that is the price level changes, and the day by day right now that is the inflation and other factors, and day by day that is the raw materials, spare parts and the other consumable items. Now they are in increasing trend. If rising the price levels, so in this situation the firm or the business will maintain or will require more amount of working capital. Then the levels of taxes. If the government will enhance the tax rate, and finally the business or the firm will pay the tax to the government. If the tax rate is more, then in such case the firms or company will maintain or require the more amount of working capital. If the tax rate is low, so it will be the otherwise vice versa. Okay. So here the example is now the tax rate is corporate tax is that the 20%. If the government will enhance it to the 25%, Then, so in this situation, company or the business will require the more amount of working capital. If it's a, suppose right now it's 20%, it will be reduced to 18%. So differential 2%. So it's a, that is the benefit, okay, or it's the income to the business. So in this situation, company will maintain the low amount of working capital. So next one is that is the depreciation policy. What is the meaning of depreciation? Depreciation, it is the decreasing value of the fixed assets. Again I am repeating depreciation. What is the meaning of depreciation? Depreciation is the decreasing value of the fixed assets. Yes, if a business or a firm will maintain more depreciation policy, so in this situation, so that company will maintain the low amount of or the less amount of working capital. If a firm or business or company will maintain the less or make a provision the less depreciation, so in this situation, so that company will maintain the high amount of working capital. So next one is that is the rate of stock turnover. It's also very vital. If a firm is having with a high rate of stock turnover, I mean the finished goods will be sold very quickly. Finished goods will be sold very quickly. That is the high rate of stock turnover will require the low amount of working capital as compared to the firm is having the low rate of turnover. Okay. So here a company's rate stock turnover is high. A company's rate of stock turnover is high. So in this situation, a company will require the low amount of working capital. If the B company's rate of stock turnover is less, so in this situation, B company will require the more amount of working capital. Yes. Operating efficiency. What is the meaning of operating efficiency? It is related to the optimum utilization of the resources. Okay, dear friends, whatever the investment into the business, and the business has its own cost, right? I mean the business has to pay the interest or dividend, and it's the responsibility of the business. Whatever the resources are available in the business, it's the primary responsibility of the business, that is the optimal utilization of resources at the minimum cost. If better the operating efficiency releases the working capital pressure and vice versa. Okay, similarly, suppose a company's operating efficiency is better as compared to the B company. So in this situation, A company will need or require the low amount of working capital as compared to the B company. Dear friends, I am hopeful you are clear. The next one is that is the availability of credit. So credit is very vital from the working capital management point of view. So here the need of working capital in a firm will be low if it avails the liberal credit policy. Yes. So a business firm will need the finance, and when the business firm will raise the finance and it will be available, so in this situation the credit facilities, if there will be the liberal credit policies, so in this situation, so there will be what is this, that is the low amount of working capital. Okay, so last but not the least is the other factors. What is this? That is the management attitude. That should be the favorable and the positive management attitude, and that is the wages rate as well as irregular of the supply, and the government policies. If the government policies are favorable, so far as that is, let's take an example, that is the GST rate, or that is excise duty like this. Then the credit policy of RBI, suppose the bank rate, now the interest rate will be announced. Similarly, Okay, the working capital will be affected. Then inventory policies and the types of business, and then the types of business. So these are just like just like that is the primary sector, secondary sector, and the tertiary sector. So these are the factors which they usually normally influence the working capital. So dear friends, I am hopeful so you have learned a lot. If you like this video, kindly you subscribe it, kindly you forward it, kindly you share it, and I am welcoming your valuable comments. So I am requesting to all of you, kindly keep your valuable comments and drop in the comment section. So once again, thanks a lot to all of you.